the setup for this could not have been harder. Expectations very high. The stock up 34% year to date, of course, with everything else down, and the stock is jumping 10% after hours. Revenue and EPS basically in line, 5.77 billion for the revenue. EPS a little bit behind, 157 per share. But streaming net adds, which everyone was focused on, did they add many customers in the quarter? 15.7 million, 15.8 million to round it up. The estimate came in at about half of that, about 8 million or so, 8.2 million. So they have blown past the expectation of subscriber adds during the quarter. And don't forget as well, guys, that we only saw the lockdown really kick into pace in the final month of that quarter, and yet they have blown past the expectation. Just for a guide of where those numbers were for each of the quarters over the last year, it was adding 9, adding 3, adding 7, adding 8. And now they've just added 16 in a quarter. Their forecast for next quarter is to add another 7.5. I have to keep digging through the numbers, but I think that is what the stock is keying off, Mike, up about 10% or so after hours.
Yeah, there's no doubt that's the number that stands out. It's unclear if the street had revised up subscriber growth estimates coming into this based on some idea of an acceleration based on a lot of the stay-at-home activity. But without a doubt, that's the key metric. The other side of it, and nobody's really probably going to talk about this as a sustainable thing, but production shutdowns is going to maybe cost them some new content at some point, but it also probably slows down cash burn and will be a little bit of a test on exactly how much the subscriber base really needs the constant flow of new content.